Today, I'm pleased to welcome to the show Kellan, co-founder and COO of the Parcl Development Company. That's the company behind the Parcl application, which many of you may have used on the Solana blockchain. Really excited to have him here. We're going to talk about all things DeFi as well as Parcl itself today.
Thanks, Patrick. Great to be here. Thanks for having me.
Yeah, no, honor to have you on. To start, why don't you share a little bit about yourself? What's your background? How did you come to found Parcl?
Yeah. Yeah. I've been in, like, I would call it a traditional finance role for basically my entire career pre-Parcel. Um, Kind of a bit of a diverse background. I started at a market research firm, tearing apart phones and identifying the semiconductors within them and mapping those to data to inform investors about trends in like the chip world. From there, I went to a global bank to do equity research, also covering semiconductors, and then I went to a trading role there. Like right after that, I worked at a hedge fund, actually alongside one of the other co-founders, Trevor, co-founder and CEO of Parcl, the development company. Um, and in that most recent role, trading tech stocks, long, short, relative value, market neutral, pair trading, picking winners, shorting losers. And so I got, indoctrinated into crypto f- you know, somewhat early on. I followed along from kind of the origination of Bitcoin and dabbled in like the 2011, 2012 timeframe. And then in 2017, through actually work, I did like a deep dive in the 2017, 2018 kind of bull run, first cycle, or like second cycle maybe, and learned a lot about Ethereum and programmable money, and kind of saw the vision. And that was a function of needing to understand the demand it would have on chip supply. Kind of crazy, right? Like the demand on GPU chips. So that kind of set a foundation. And then in 2020 and 2021, COVID's happening. We're at this hedge fund, Trevor and I, you know, putting on pair trades, long, short, and a pretty obvious pair trade popped up, and it was in real estate. It was like, you can live and work anywhere now. I would love to get long exposure to, a place that people actually want to live year round, like Miami, and short, a place that they'll be leaving, like New York. And there's no way to do that. There's like no way to get that trade on in a liquid way, which is crazy because real estate's the largest asset class in the world, in net asset value, residential that is. And so that basically kicked off Parcl, and here we are today. We'll get into what happened since, but that's the background.
Interesting. And why do you think it is that DeFi allowed you to make that pair trade possible in a way that you couldn't have done without DeFi?
Yeah, it's a great question. There's kind of two things that enabled this. One is the data and like the modernization of data generally, and the commoditization of data, and in real estate in particular, right? It kind of opened our eyes. The more we started working on this problem, the more we realized how archaic the data landscape in residential real estate is. And there's been much progress made. You can think of like the listings aggregators. They kind of brought real estate online, but the back end is still crazy legacy. So that's one. Two is DeFi. Like at the highest level, like philosophically, if you think about what DeFi is, it's a mechanism to pool capital globally, so borderless, programmatically, right? Without, in many cases, without custody, or in almost all cases, custody it's permissionless. Custody is managed by a layer one blockchain. Executions managed by a layer one blockchain, and then you kind of just implement the software that underpins whatever the application is. And and Solana in particular was a big unlock because the marginal transaction costs were so low, and the throughput, maybe not at the time that kind of we committed to building and developing this on Solana, but certainly now and recently, the throughput is fantastic. So you basically have, Anatoly's vision is the NASDAQ on a blockchain, and that allows for these type of applications, and for the first time. And then the last thing I'll say is that perpetual futures as a financial instrument allow for these things that are very hard to deliver, right? In this case, like the representation of real estate or the market price of a whole city of real estate. There's nothing to deliver, but there's pricing there, and people have a lot of exposure to that on the ground. And perpetual futures and similar products allow for that to be expressed and create ways to generate ways to create liquidity for those type of products. So those are the two things that kind of, for the first time ever within the past, let's call it 5 or 6 years, enabled this product in our view, and it's why it's such an opportunity.
Wow. And when did you actually start building Parcel?
Yeah, it was in the back half of 2021.
Back after
Um,
2020.
and that first 6 to 12 months was just all team building and infrastructure, our research and development. The data side, we'll talk about it, I'm sure. Parcl
Mhm.
Labs is kind of like the price index that had to be created. It became very obvious early on that there was no third party plug and play real estate data feed that you could just wrap a decentralized exchange around. And so, it became clear that it was going to be a pretty heavy, infrastructure investment slog to bring this vision to life, but one that's been very rewarding and really awesome to see take hold. So we've been in flight for over 2 years now, closer to three actually, or like 2.5, and yeah. So 2021 was Genesis.
And how did you? I don't think you mentioned this already. How did you meet your co-founder?
Yeah, so Trevor and I, we were working at a hedge fund,
Okay.
together, not on the same coverage, but at a small hedge fund. And then there's a third co-founder. His name is Jason. He's the head of Parcl Labs, and he was at Microsoft doing data analytics and working on large language models, working on some AI, and we kind of all came together in, like, let's call it the fourth quarter of 2021.
Right on. And were all of you into crypto before then, or?
Yeah, Trevor had a similar journey. He covered software and payments throughout his career, public stocks primarily. And so he got in, his deep dive into crypto happened around the same time that mine did, but for completely different reasons. What is the implication that this emerging sector might have on, especially on the payments infrastructure of the world? And I think we're just now starting to see that kind of take flight. But when you're on the equity research desk at a big bank or at a hedge fund or at an asset manager, you need to keep track of these emerging technologies, especially the ones that could have, like, that have breakthrough potential and are just totally blue sky and could disrupt everything. And that's kind of, for different reasons, we both got coached up on blockchain and crypto, and especially like the promise of DeFi around the same time.
That's always interesting how people come to it. So pivot a little bit. A while back, I remember you wrote a really great thread. I think one of the best I've ever read, truthfully, about how DeFi was poised to unlock this huge wave of financial innovation and all these different use cases and applications we're going to be launching. Can you talk a little bit more about that?
Yeah, for sure. I appreciate the kind words. It was, I think, my best thread in terms of engagement, by like a wide margin. But maybe we can cite it somewhere so people can click in. But yeah,
Yeah, I'll link it down below.
awesome. The intent was to kind of approach the opportunity, and like frame where we are in this innovation cycle, and approach it, the same way I approached writing an initiation report for Tesla when I was at the bank, or covering Nvidia, trade when I'm at the hedge fund. Like, there's a lot of attention on what's happening. It's early, and here's why, the bulls are right. It's like this is going to become a much larger industry, and it's because the technology is so promising. And I think I kind of touched on it earlier, but I framed it around two, you need to kind of draw different people in, and but I framed it around the opportunity Solana has and the opportunity that Coinbase has. And then I kind of zoomed out and said, this is why those opportunities are so massive. There's like a macro layer here where this technology is going to enable all sorts of transformation and share taking from the existing, financial rails. And I think, there's a handful of reasons why that is. If you think about the existing financial system, it's all about, it's very Darwinistic. It's how fast can you execute, custody, settle, etc., and how cheap can you do it? And blockchain, in many ways, the promise of blockchain was that it would improve on every one of those vectors and others. Payments is another great example. Transmission of money, etc. How fast can you do it, and how cheap can you do it? And how much of a burden is it for the user? And I think we're just starting to see some of these, especially these infrastructure layer ones like Solana, and some of the layer twos and some alt layer ones, and even Ethereum in some ways, deliver on this promise, which is like, we can move money around the world at the speed of light for very low cost. And there's instant settlement. Custody is, it's permissionless. There's no intermediary, which is always a cost adder. And I think that if I'm at an existing financial institution who makes a lot of money off of some of these like rent-seeking parts of the financial, daily financial movement of money, I would be looking at this very closely and say, this is going to disrupt me. And I think that if you think about that as like a fundamental layer, and then you add on all of the applications that can be unlocked by this technology, like Parcl, which we've kind of run through why Parcel's, it's possible because of blockchain in many ways. That's going to draw in trillions of dollars over, whatever the time frame is. I'm not really as concerned about the time frame. This sector's been at it for 15 in earnest for 15 years now. But it seems very obvious to me that where we go from here is that this takes a lot of share from the existing parts of the existing financial system, and it's a much larger asset class in the future.
What do you think has to happen for it to take that share from the existing financial system?
Yeah, I think there needs to be some breakthrough applications. Hopefully Parcel is one of them that brings this more, to more of the masses. I think with each cycle, some percentage of people net new people have onboarded. And as a result, there's now, a couple 100 million people probably that are what I would call like crypto native or crypto curious, or, on chain, especially folks with like self-custody wallets and whatnot. I think that to really take this to the next level, we need to get over 1 billion. If you look at the adoption curves of any major technology, the iPhone, air conditioners, refrigerators, like it kind of plods along, and then there's an S, there's a big S curve, and then pretty soon 80-90% of the world has access to this new technology. We're probably right on the verge. I think that within the next couple of years, there's going to be some sort of a breakthrough that onboards billions of people into this ecosystem. And then the next thing is regulatory clarity. Any financial innovation is looked at skeptically from the establishment. It typically, opens up a lot of risk surface for bad actors and, things that look innovative but actually aren't, and end up kind of, creating some sort of an impairment in the existing system. And as a result, I think with plenty of good reason, the regulatory, amoeba of the world looks at blockchain very critically and very, in some cases, skeptically, and that keeps a lot of institutional dollars on the sideline. A lot of the institutions and individuals that control the majority of capital in the world, they need some sort of clarity to really interact with this technology in the way that they want to, and unlock its promise. And you see like a lot of major financial institutions like JP Morgan, for example, working on their own private blockchains to kind of, in some ways, like prove out the technology, I would imagine, but also, to develop applications that will genuinely benefit their customer base on top of it. And I think to cross that chasm to public permissionless blockchains, there needs to be some sort of regulatory certainty. And I think we're starting to get it around the world in many of the first world kind of like technology centers and financial centers. the US, which is the financial and technology center of the world, is kind of lagging, which is unfortunate. I think it's typical. Things move slow, and I think that a lot of people working on this problem are very passionate and want to get it right. But that's not how technology operates. Technology moves very fast, and it wants answers now, and it innovates right now. So, kind of finding some compromise there will be a huge unlock, I think, and will take us to the next level.
Well spoken. So obviously regulation is important. What do you view as the threats, if any, that could either delay or prevent that onboarding of, say, 6 trillion people to crypto?
Yeah, I think I'm a huge fan of like the Fermi paradox and these like existential things. And there's this thing in the Fermi paradox called the Great Filter. It's like, why haven't we seen? Why don't we hear from aliens? Is the filter ahead of us or is it behind us? And the Great Filter could be anything. It could be like a major disease, like the Black Plague. It could be that society eventually destroys itself when they get enough technology, like nuclear weapons. It could be some predator alien society just takes you out if you get advanced enough. I think the great filter for blockchain and crypto very nearly was these centralized exchanges that just ran up, allegedly ran up effectively crazy Ponzi schemes, and very nearly took down the entire sector. And we're like in many ways super antithetical to like the founding principles, right? Self custody, permissionless transactions, global availability of capital, contract, software as code. And then, we just saw with the cycle that we were just in, on the backside of COVID, a lot of these centralized exchanges dominated the dollar volumes and attention, and then spectacularly imploded. And like that helps nothing. It doesn't help onboard new people. It leaves a sour taste in their mouth. It wakes up the regulators to really crack down on the sector as a whole. It's just very anti-progress, and I'm glad that that's behind us as a sector and as an industry. And I think we're finally like emerging from the darkness of that cloud that's been under large parts of the ecosystem, particularly in Solana, right? Like FTX was a huge participant on Solana. And it's like cleaned the setup, right? We used to call this like when a company that was reporting earnings guided down and just really reset expectations, it like cleaned up the setup, right? You now have the deck is cleared, and now we can go and we can grow from here. And that's exactly what happened. And I think we're just starting to see it. And I'm really excited because the fact that we made it through that was like making it through maybe a great filter. So I think we're it's smoother sailing from here. It should be.
Oh, that's good to hear. I thought you were leading into basically saying humans are going to go extinct, and that's what would stop.
Well, don't go down to whoever's listening. Go down that Fermi paradox rabbit hole as deep as you want, and you can draw your own conclusions. Some of it is kind of dark, but yeah, no, that's not what I'm saying. I'm taking the optimistic view.
Oh, that's good. Do you know the dark forest theory related to the Fermi paradox?
Tell me, give me your recap, and it'll trigger it for me.
Dark forest. It's a similar thing. Basically, dark forest theory is the reason we don't hear from any alien civilizations is that it's like you're in a dark forest full of predators.
Oh yeah.
You wouldn't want to make any noise.
Yeah, that's the reasoning for not doing what I think is called SETI, which is like broadcasting. Putting like
blasting radio waves saying we're here.
Yeah, hey, come find us. Here's a little video of SpongeBob. Like, look at us, we're so nice. And then womp, like you get just taken out by some predator society that's like, you guys are idiots.
Some predator that's like a hyper advanced ant and has no morality. Just
exactly. We don't even know we don't even know that they're in the room with us. They're probably right
I can decompose these people for for heavy metals or something.
Yeah, exactly.
Really interesting. That's I love this high level talks about DeFi and tokenization, all that. But want to dive into Parcl before while we're on the podcast, of course. So first, we talked about it a little bit already at the start, but elevator pitch. What is Parcl?
Yeah, Parcl is a decentralized synthetics exchange for real estate prices. So you can get long exposure, you can get short exposure to real world real estate market prices in real time. And the way that that's delivered is through a price feed or a price index that's it updates in real time every 24 hours, first of its kind, and that's developed by Parcl Labs. And then a decentralized perpetual futures exchange developed by Parcl that anyone can interact with and either trade long or short or provide liquidity to underwrite the exchange. And that's what Parcl does.
Awesome. So from a user's perspective, like say I am someone this is my first DeFi application I'm using. What would be the sort of asset that I would be able to trade on there, or what would be the sort of price I'd be able to speculate on?
Yeah, you're trading the median price per square foot or square meter of a geographical boundary, right? So there's going to be hundreds of transactions and maybe 10 times as many price changes in the New York metro area today, and many more this week. All of those are new data points. They're all new prices. Those feed into a model or an index that at the end of it spits out a median price per square foot. So if listings net came down, people were lowering prices in New York this week, you'd see that price index or that price feed begin to tick down, right? So the median price per square foot in New York would go from, let's say, $560 to $555, and you get a new price every day. And what users are trading is their exposure to a perpetual swap around that price, right? So if you're long, you're holding a perpetual swap that says that the price is going to go up. And if you're short, you're taking the other side. And there's some balancing mechanisms and architectural things to keep everything balanced.
And Parcl Labs supplies the prices.
Yeah, that's exactly right. Parcl Labs is a wholly owned subsidiary of Parcl with some key things in place to kind of give it some independence. And they are the publisher of these price feeds. They're the developer and publisher, and the price feeds they update every 24 hours. They get fed through an oracle. They go on chain, and then feed into the smart contract that underpins the decentralized exchange. And Parcl collects all sorts of real estate data in real time. In methodology is quite similar in some ways, quite different in others to some existing benchmarks like the Case-Shiller index in the U.S. There's a large, blue chip cities around the world kind of have their own like home price indices. The UK has one, Paris has one, Singapore has one, and Parcl Labs collects a lot of the same data and some additional data and does it in like the most real time way possible with all sorts of data science and advanced analytics and like what I would call like a modern tech stack.
Interesting. And you mentioned feeding it through an oracle. Is that an external oracle or an oracle that Parcl Labs operates?
Yeah, it's actually a Oracle that the Parcl trading platform itself operates, and it's a custom Pith implementation. So it's a Pith
Oh, I
Oracle that's
see.
been customized. You can say forked, and then the publisher, the primary publisher, is Parcl Labs. Over time, there could be several publishers, right, feeding through a more like public Oracle system, and so you have that like redundancy and validation, multiple input validation layer. But for now, just to get the engine going, Parcl runs a custom Pith Oracle.
Interesting. And maybe you don't know this because I know there's some separation there, but are there any plans to offer that as a independent product? Because I imagine there's other people who would want an oracle for real estate prices as well.
Yeah, yeah, and a lot of those people don't even call it Oracle, right? For them, it's like an API endpoint or a data feed or whatever. So yeah, Parcl Labs has commercial relationships with all sorts of different customers, large institutions, corporations, individuals, people involved in real estate, um, and I think there's a really cool opportunity there um, to kind of onboard those users to the data validation layer of blockchain. And there's a huge opportunity there, for redundancy, for authenticity, for permanent uptime for API access that's authenticated through, your API key is done on a blockchain. Like there's a huge opportunity there. We can get into that maybe on a different call. But I'm super excited about that, and Parcl Labs is too.
Sweet. Yeah, no, definitely excited to see where you guys take that. To get back to the product a little bit, just yeah, I know there's a lot, but what are some of the examples of markets that people could trade on there if they were to
Yeah,
hop on today?
great question. So there's 8 tradable markets today. They're all North American, major cities and metros. You can think like New York is on there, Miami Beach is on there. So like that genesis idea of parcel, that trade's possible today. Los Angeles, Las Vegas. Coming soon, what I would call like global blue chip cities: London, Paris, Hong Kong is kind of in development. 2 Canadian cities, Vancouver and Toronto, are in the pipeline. And ultimately, the intent is to kind of blanket the globe. Anything in the top 200, at least in population terms, or like the majority of those cities and metros, it would be great to have those as tradable markets on Parcel. There's a lot of work that needs to be done to get there. And then you can also kind of drill down into more regional markets. Most of North America or most of the United States is covered by Parcel Labs. So you could have and Brooklyn actually is on a trading platform today. So the borough of Brooklyn, there's a New York City market, which
Oh,
is the 5
interesting.
boroughs, and then Brooklyn's on there as well. And then you could get down to the neighborhood. There's no reason you couldn't have Tribeca. Actually, in an early implementation of Parcel, that was a market that was available. It's a little more volatile because it's just a smaller surface area. There's fewer transactions on any given day, week, or month, but it's possible to have a market. There's no reason it can't be done. So it's a really adaptable and flexible product.
Interesting. Something I was thinking about is, so people are speculating on these markets. They bet the price is going to go up, and then the price goes up. They make money. Where is that coming from? Because it's Oracle based, right? So where's that money coming from?
Yeah, so it's kind of like the market it's a market of longs and shorts, right? And the architecture of the protocol is kind of really incentivized to balance those longs and shorts such that they're as close to 50-50 as possible. So when the prices go up, the longs pay the shorts. When the prices go down, the shorts pay the longs. And then there's a role for liquidity providers kind of underwriting the whole exchange. And in the case that there's an imbalance between those two, even if temporarily, which is the majority of what we've seen, the LPs kind of underwrite that. They would fund realized gains in advance of realized losses, knowing that they'll get the realized losses back later given the balance in the market. And in exchange for doing that, they get the majority of the trading fees generated. So it's very similar to a lot of other really a lot of other derivatives markets, or things that look like derivatives, in that you're effectively kind of balancing the market, providing a venue for folks to get the exposure they desire, and they're getting paid by the person or the individual or the entity on the other side.
Yeah, that makes sense. And I suppose because real estate, it's not, generally speaking, going to be as volatile as something like stock, where you couldn't have a situation where it suddenly fluctuated by a massive amount, right?
Yeah, I mean, barring like a
Natural
data
disaster.
issue, a natural disaster, or like a data problem. So I can't say like zero. There's a 0% chance, but yeah, all else equal, in almost all scenarios, it's a very low vol asset. The average trading market on Parcel, I think, moves like 30 to 35 basis points. So about a third of a percent on any given day. Some days are above that. You could see 1% moves. Other days are below that. You could see hardly any move. And that really is it's a benefit to the architecture, right? Because you don't have these crazy 10-20% runs where the funding rate has to respond to that, and there's a skew problem, and then the longs are off sides and the LPs have to underwrite it. Like it's just way less of an issue for this architecture. um a lot of other successful perps protocols, especially perps are almost ubiquitous in crypto, and basically not at all in the traditional finance system. I think that's going to change dramatically. That's like a core thesis of mine. But there's these really speculative assets, bonk and dog with hat, and Bitcoin itself is a high vol asset. So here you have real estate much lower vol, much easier to kind of like manage risk. And it's a really beautiful architecture for that use case.
That makes sense. So say just hypothetically, if you had a 2008 type scenario where the real estate market crashed, or even with a local market, say you had something like a Hurricane Katrina
Yep.
happen,
Yep.
um, that's it can handle that sort of volatility, the architecture.
Yeah, I mean, we need to see it play out, right? I would actually love to see that, because this product can play a really crucial role during that period, right? You can think of it almost like for certain users, it's synthetic insurance. Who's going to underwrite an insurance policy on my house in New Orleans with a hurricane bearing down? Nobody. But I could hedge on Parcel, or like that's possible.
Interesting. Yeah.
Um, and I actually think in 2008, it depends who the person is that you're interacting with. But the if this product existed in 2008, at minimum, it would have increased transparency, and it would have provided a venue for liquidity. Right. The big problem in 2008 was everything was in a black box. Nobody knew where the risks sat. Nobody knew who was exposed to what and how much exposure they had. And blockchain solves almost all of that, right? Like, it's all on chain. I can see exactly where the risk sits. You can log on to Parcel right now and see what skew is, what's the funding rate, how many people are long, how many people are short, how many dollars are in there. None of that was possible in 2008, and it created this cascading effect of effectively, bankruptcies and liquidations, because as people peeled back the covers, they realized that a lot of the asset value was not anywhere near what everyone thought it was. So I think that this product, I would never wish for a 2008 scenario, but I would expect this product to perform well and provide a real utility to the world, right? It's a venue to kind of offload risk. That's what almost all swaps and futures and derivatives and things that look like derivatives, all those markets, they kind of exist for that reason. For an oil producer that doesn't want to carry the price risk in the time it takes them to extract and refine the oil, they would use a future to lock in the price that they receive, right?
Hmm.
It's there's similar concepts here at play, and I think it's just a net positive to society for a product like this to exist and serve the largest asset class in the world, which is residential real estate.
Interesting. Yeah. No, that I can think of it now because I'm considering renting my house, and I'm thinking of situations where if I wasn't sure about the price, I could hedge with shorting or
Yeah,
shorting the
exactly.
market at
And
the same time.
you could, in the scenario where you're a homeowner, right, and you are concerned for whatever reason, um, and you don't really have an alternative today. It's basically sell and downsize or relocate or restructure your loan, do like a cash out and take on more debt. There's no way to lock in your paper gains without doing one of those two things. Here, say I own my home let's just say I own a flat in London. I think London's rolling over. I'm a little worried. I think it could be in for like a 5-10% correction. I'm going to put a short on. It'll cover some. It won't be for the full value of my home, but it's some fraction of it. And that way, I'm protected. Like, I have these gains on paper. Maybe I, have done a little bit more spending because I made so much money on the value of my home. Here's a way for me to protect myself if things kind of correct, I guess. And in that 2008 scenario, that would have relieved a lot of pressure. There was what really got the ball rolling and kind of kicked off this like cascading effect or domino effect was these, the riskiest portion of the homeowner base effectively getting liquidated, right?
Hmm.
They got foreclosed on, their mortgage, their lender took possession of the home, and now those are forced sellers. You've introduced forced sellers into the market, and we see this when Bitcoin legs down and all the perps get blown out and everyone gets liquidated, and then that like resets the decks and cleans up the setup. Same concept. If you can provide a venue to offload some risk, that will minimize volatility, or it should, at scale.
Cool. So final question on Parcel, and then we'll wrap it up with some general ones. But where do you see Parcel going over the next few years from the current markets you trade and current products?
Yeah, I think Parcel will go. It's gone from a proof of concept, a novel proof of concept, to something that a small group of niche users kind of proved out, to something that's found product market fit in the crypto ecosystem. I think almost certainly. And then I think the next step is to kind of find product market fit outside of crypto, right? Like this is a product that speaks to anyone and everyone. Everyone has a relationship with real estate. If you're a renter, you're actually, you're synthetically short, right? If the price of the real estate market you live in goes up, your rent goes up. So, that's your exposure as a renter. As a homeowner, it's probably your largest line item in your balance sheet as both an asset and a liability. And institutions have much of the same exposure to the asset class. We've seen a lot of on the ground home buying by these large institutions like BlackRock and Blackstone, even some more like fast moving asset managers. So everyone has exposure to this, and at minimum, they've been born somewhere, they've lived somewhere, and they've traveled somewhere. Those things that applies to basically everyone on the planet. So how do we bring this product to those people? What needs to be done? How do we onboard those people? How do we get to those real world use case scenarios? Where I'm a renter and I want to hedge my rent going up, so I get long wherever I live. I'm a homeowner and I want to hedge my the value of my home declining, so I get short. That's where we want to go. And in order to do that, it has to be product led growth. There needs to be new markets. You need to offer more markets for people to trade. That'll unlock a lot of stuff. And then I think just the growth of the blockchain in general, that regulatory clarity angle is super important. We all need that. Parcel for sure. And if we can get some of those things in place, then there should be billions and billions, tens of billions of dollars, maybe hundreds, flowing through the system and unlocking liquidity, and giving people a venue to get exposure to this asset class.
Right on. You know what I would love to be able to speculate on would be real estate in some of these developing countries that don't let foreigners own real estate, but
Yeah,
that they're developing, and you
yeah,
can know that that's becoming more valuable. Some of those ones I'd love to be able to speculate on it, because it's like, I think it was, what was the country I was looking at? Vietnam, maybe. I was like, I'd love to be able to
yeah.
speculate on it becoming more valuable, but you can't buy real estate as a foreigner.
I mean, I wanted to get exposure to Mexico, in Mexico
Yeah.
City, like that. And it's like for me to do that outside of Parcel is just there's no way I'm going to do that.
Mhm.
Maybe I'll like buy the ETF that represents all the companies in Mexico. Like that's
Yeah.
the easiest way for me to do that.
Or El Salvador, right? So
El Salvador is another great example. They've had like a kind of a renaissance as far as I understand it. There's a lot from the user base now, which has grown quite a bit in recent months. There's a lot of now people asking for new markets.
mhm.
Greater China, developed Asia, less developed Asia, parts of Africa. Everyone has an idea. They have a take, right? Everyone has a thesis. They think they have alpha. Oh, like that is definitely going to be worth more in a couple of years. Like that's the exact thing we want to enable, is giving people a venue to place that bet effectively.
Awesome. So, final question is, aside from your own product, what's the most innovative thing you've seen in DeFi recently?
Yeah, it's a great question. I think just flavor of the week, but also because it's a sensational product and the team's fantastic. Jupiter is, I think the best aggregator in all of crypto. They now have perps. It's like all-in-one solution. I would, if Parcel could replicate that for real estate or digital real estate or getting exposure to real estate, I'd be thrilled. And I think Parcel's well on its way. Um, I'm interested in like Parcel obviously is in the real world asset category. I think Ondo Finance is interesting. Credix, which is a Solana protocol. The other thing that's super interesting is kind of DePIN. I think what some of these GPU networks are doing are really interesting, like Render and IONET. I think that could be very interesting. It will make the cost of data, or like whether it's rendering or just having access to a GPU, it could bring the cost down quite a bit and make it globally available, and democratize access. I can't pick my favorite child, I guess, is the point.
Yeah, and you were a semiconductor guy,
Yeah, I
so
was
yeah.
semi, so the GPU stuff speaks to me quite a bit. Like that makes total sense. If you could, create a marketplace for people to get access to compute, and have a network token around it. Oh my God, that's like the golden goose.
Awesome. Yeah, we have a lot of the same theses, it sounds like. Well, this has been great. I learned a lot. I'll provide all the relevant links down below. Thanks for joining me, Kellan. Thanks everyone for watching. Be sure to like this video and subscribe. And thanks for joining me.
Thanks, Patrick. Thanks for having me. Great discussion.